Gokaldas exports is on our radar. They reported numbers, and numbers do seem a little subdued for the company, which they reported earnings. Well, let's just quickly welcome in the management, which will be joining us in just a bit from now. I think we'll have the company joining us in just a bit.
Mr. Ganapathi.
I think Mr. Ganapathi is. I think, is he with us now? Okay, I think he is with us now. Mr. Ganapathi is with us to take some questions with regards to the numbers. Mr. Ganapathi, good morning. Great to have you with us here. Thank you very much for your time. Sir, looking at these numbers, I kind of go back to what you've been telling us, I think from the beginning of this year, that maybe towards the end of this year, a lot of the inventory in the US, etc., will start to get corrected. And that is when a real pickup will start once again. Is that not playing out, or did you expect some of that to play out in the quarter gone by? Because it doesn't look like that. Or are you expecting that to play out, say, in the October to December and the quarter after that? Just give us a sense of where we are in that cycle.
Sure. So as I've always maintained, in the first half of this year, the inventory problem would be an overhang on the business, and we did face as expected. From the third quarter onwards, when we start manufacturing for spring of 24, and then in the fourth quarter go on to summer of 24, we've seen that most of the inventory-related issues in the with the brands have more or less dissipated, and the traction has really picked up. So our order book for the third and the fourth quarter seems to be very strong, and we've almost ramped up our manpower to cater to that. So we are on a growth from the third quarter onwards. Till the second quarter, we did have some of the inventory-related issues and the demand-related issues impacting us.
Okay, all right. Hi, Mr. Ganapathi. Good morning. So good to hear that the outlook is positive from year on. But what do you end this year with? At the half-year mark, you're a degrowth of low teens. What do you end this year with in terms of a revenue number? And what could be the broad margin band? Because now operating leverage will play out as you start growing again.
Right. So from a year-end perspective, our attempt is to try to at least come to the level of last year's revenue as far as Gokaldas is concerned. Keep in mind that we recently acquired a company in the Middle East with operations in Africa. So that would contribute to some incremental revenue in fourth quarter. So if I look at the company as a whole, we would probably have a reasonable growth in this year. About 10-12% growth YOY. But if you look at the base business, which continued from last year, I think we would be more or less at par. And that, in a situation where the global demand is down by about 25%, is a fairly strong performance, I would reckon. As far as margins are concerned, that's your next question. I think we currently, I believe that for the year, we will be somewhere between 12-12.5% EBITDA margin, and that's what I would reckon we will deliver. Our endeavor would be that over the next 2 to 3 years, we should be able to drive another 1.5% improvement.
Okay, so 12 to 12.5% EBITDA margins is what you're looking to clock in by the end of this year, and on an average, about a 10 to 12% revenue growth, right? Is what you're talking about?
Yeah, that's that's with the acquisitions as well, right?
With the acquisitions, got it. I think earlier you had also said that your peak revenue potential by FY26 is in the range of around 3,500 to 4,000 crores. Is that the level that you hope to achieve even now, or has there been any kind of change in that? And I mean, what would take you there?
No, so the current capacities which are coming on stream and all the strategic initiatives that we have taken will take us to those levels. So we are comfortable in holding on to that kind of a growth.
Okay. And in terms of the Atraco acquisition, how is that coming along? When do you hope to see benefits from that play through?
I think it will take till the end of this year to conclude. We are awaiting regulatory approvals from Kenya and Ethiopia. So that's work in progress as we speak. My sense is that by December we should have most of that to be concluded. So fourth quarter onwards, perhaps.
Okay. All right, what about the big opportunity we have been talking about, UK-India FTA? You know, as you mentioned, I think it's close to around $1 billion of an opportunity. What part of that pie can you capture, Mr. Ganapathi? And also, could you tell us when you expect it to come about finally? Because, you know, that's being pushed down. So the hope is that it gets closed, but by when do you expect it?
So it's very difficult to, guess something like this because it's a policy initiative, and there are, FTA is not the only agenda which government of India is negotiating with government, the United Kingdom government. So there are multiple components to a trade agreement. So I'm not in a position to guess as to when it will happen, but my sense is that it should happen soon enough. And if that does indeed happen, I think FY25, we should, it takes a while for the FTA to play out in terms of actually realizing a duty-free access to the market. And if that happens, I guess we should see a fairly good traction for Gokaldas as well, because we're already working with two large UK-based customers, and we will see the traction grow up pretty significantly.
Okay, I just have one last question. You know, in your commentary, in your press release, you mentioned that there has been lean demand from major brands. That's because they've been carrying excess inventory. But you're confident that there'll be recovery in the second half. How can you be so sure about the timeline? Is there a possibility of a delay in the recovery?
So some of the second half is evidenced by the orders that we already have. So we are already into the second half starting October 1st. So we are seeing that traction. That's number one. Number two, most of the spring summer inventory, the brands have more or less liquidated and have come to a level where they will have to now start ordering more in order to fulfill the market. Of course, the geopolitics continues to play, and the high interest rate regime in US could impact demand going forward. So those kind of market conditions may play out a bit, but from our standpoint, what we are actually seeing as orders in hand, we see, and I'm drawing strength from that. I'm drawing comfort from that. We are seeing a fairly strong H2.
All right, Mr. Ganapathi, quickly, just before we let you go, so you're expecting organically the revenues of this year to be as much as last year, right? As much as
we are trying our best to come at par with last year. It's an uphill battle, but we're trying our best to do that.
And including the acquisition, it'll be a growth of close to 10 to 12%.
That is correct.
Okay, good speaking to you, Mr. Ganapathi. So the past quarter is a bit of a disappointing one, but the outlook from here on is looking much better. As you said, order book as well is looking good. Margins are expected to improve in the coming years, and that India-UK FTA, whenever it gets signed, it's a big opportunity that comes on the table.